Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering changes to how certain multi-state service providers, including tax professionals, apportion income to California. We cover the changes to these market-based sourcing regulations in much greater detail in the October 2025 issue of Spidell's California Tax Letter. For subscription information, go to spidell.com and click Publications. Beginning with the 2026 taxable year, California is revising how businesses with customers in California as well as in another state apportion their income to California. The changes include a much simpler method for service professionals to source their income among the various states where they have customers. These changes may impact tax professionals located both inside and outside of California who have customers in both California and other states, because it may change how much of their fees are subject to California tax. Under the revised rules, certain service professionals, including tax professionals who provide services to more than 250 customers, can simply use a client's billing address to source the income inside or outside California for all clients. This means if a California tax professional corporation provides tax services to 500 clients and 100 of the customers have an Arizona billing address, then 20% of the tax professional's gross receipts will be assigned to Arizona, and the remaining 80% will be assigned to California for purposes of calculating how much of its net income will be taxed by California. However, only service providers in the following professional services categories are eligible to use this simplified method: actuary services, audit and attest services, business advisory consulting services, legal services, management services, payroll and accounting services, tax services, and technology consulting services. Professional services also includes services related to brokering securities that generate commission income, investment advisory services, other than asset management services as defined in the regulations, and services related to the underwriting of debt or equity. For pre-2026 tax years, a different set of cascading rules is used to determine how much of a professional's income can be taxed by California, depending on whether the professional's customer is an individual or a business. For individual clients, the professional can source the fees to the customer's billing address. However, for business clients, service providers have to determine where the benefit was received by first looking to the service contract or the books and records. If the location of where the benefit was received cannot be determined from these documents, then the tax professional has to examine a variety of other factors to determine where the benefit of service was received, which can not only be quite time-consuming, but it could also be challenged on audit. Spidell will be covering how both smaller professional service multi-state businesses and other non-professional service multi-state businesses are required to apportion their income in our upcoming federal and California tax update. You can see a list of live webinar dates and in-person seminar locations at spidell.com. That's all for this week. Join us next time for another episode of Spidell's California Minute.